Sorry, sir, your loan's been denied.
But without this loan, I'm not going to be able to buy my own home or an investment property in the right location for the right price. A plus acting if I say so myself. Now, many people are running into lending roadblocks. They're having chats with mortgage brokers, chats with bankers, and are not able to get the loan that they looked for. People want to buy $1 million home, but they don't have the serviceability and they may be capped out at, say, 800K. Or they want to build and expand and grow a property portfolio, but aren't able to get from properties 1 to properties 2 and properties 3 and beyond. We're going to talk about reframing the conversation with your mortgage broker or your bank to get better outcomes and to continue in your property journey. Whether it's looking to buy your dream home and create a lifestyle that suits you, or you're looking to buy those investment properties to get from properties 1 to 2 to 3. We're going to discuss how you can overcome these hurdles in today's video and not get your loan denied by the bank. And if you stick around to the end, I'm going to share with you the conversation I had as a 26-year-old where Australia's biggest bank handed my wife and I $720,000 to continue to grow our property portfolio. So make sure you stick around to the end for that. Now, the first thing to note is we are in a tougher lending environment. The start of 2023, off the back of 2022, we've seen consecutive rate rises from Australia's central bank. And this has decreased the money supply in Australia's market because the cost of lending has gone up. But the first thing we need to note here is banks want to lend money. Banks are in the business of lending you hard-earned dollars and cents so you can go to work paying them back. Now, what this means is the bank wants to make as many loans as possible with as lower risk as possible. This means you just need to understand what the bank wants from you and give them exactly what they want. Now, to summarize giving the bank what they want, I've broken this into 3 key points. You want to present good financials. You want to have a nice, clean savings history. And you want to minimize your expenses in the lead up to your loan application. Having a good credit score or presenting good financials essentially means that all your past debts and your past credit history presents well. You've never missed your bills. You've always made your repayments on time. Whether it's a credit card, a car loan, or a previous home loan, banks have access to so much financial data these days that they're going to be able to pull these records. What this means is don't miss out on your current repayments. Don't forego making repayments on credit cards, car loans, student debt, all those sorts of things. You want to make sure you keep on top of your repayments and never miss these to keep your credit score high. A good credit score could look like something around that 700 to 800 mark. I know Emily and I have sat around that 800 mark for credit scores over the last few years. And it does dip down when you put in an application, but not significantly. So this leads me into point number 2, which is your savings history. So if you want to present well to the bank, you need to show a history of increasing your cash within your bank account. A lot of banks will ask for at least 6 months of bank statements, and sometimes they even get you to sign up to these programs, or brokers or banks get you to sign up to programs where they can see a couple of years worth of bank statements. Now, showing a steady savings history where you're saving $5,000 each month or $2,000 each month, whatever your savings rate looks like, means that you're building up your cash buffers, showing that you're saving the deposit, and if times were to get tough when they stress test your financials, that means you could continue to make higher repayments, and you've got evidence of that with your savings history. Finally, point number 3 in presenting to the banks and the brokers is to minimize your expenses in the lead up to your loan. So you want to try and reduce them as much as possible and really stick to just your fixed expenses. This is only for a short period of time. You don't need to do this for the rest of your life, but for the year or 2 leading up to getting that loan, try and minimize your expenses. Pull back on eating out, pull back on having fancy holidays and spending money on cars and things that depreciate in value, and show that you're building up your cash reserves and show that you can minimize your expenses, because this will increase your free cash flow. Now, point number 2, you're probably going to roll your eyes at this, but hear me out, is you need to earn more money to make money. Sounds too simple, right? A bank will only ever give you a loan if you are able to service the debt. It's as simple as that. So if you don't have the income and the property is not going to give you enough income that you can clearly service the debt with the bank's 3% buffers on top, and even more than that in some circumstances, then how are you going to be able to get that loan? So you need to have a solid day job income and try and make that grow. Invest in yourself and invest in your career. That could be growing your wealth of knowledge, spending money on education to try and get that next promotion, because that higher PAYG salary is going to be able to let you to get access to more debt. The difference between your income and the expenses we spoke about in point number 1 is that free cash flow. Now, having a property that also contributes to servicing the debt can be really helpful. So a bank will typically look at your PAYG income, which could be, say, $100,000 a year, excluding superannuation. And in terms of the investment property, you could be looking at a property with a 6% yield or a 3% gross yield. Now, that 6% yielding property will contribute to your serviceability and allow you to potentially make future property purchases. Be wary here that the banks will typically take 70 to 80% of the rental income in adding into your serviceability. So say the property rents for $25,000 a year, the bank might only put $20,000 in their calculator. So let me give you some basic numbers. You've got $100K coming in, you've got $50K a year in expenses, which means you've got $50K left over in your day job. You can also have $20,000 gross coming from your rental property, and you need to add in all your other expenses to calculate your serviceability. So you need to look at the interest on your loans, your insurance, your rates, your water, any repairs and maintenance, and budget all that when you're chatting with the broker and bank. And the remaining balance could be about, say, $60,000 of free cash flow each year, which is what the bank will use to determine your borrowing capacity. Now, my next key point is that different banks have different rules and regulations. Now, what this means is there's no one bank that is the same. They all have different rules, which means you can jump through different hoops, but not end up with the same result. You've probably seen this online when you've jumped on and thrown different numbers into calculators from NAB or CBA or smaller banks like St. George and Suncorp. Different banks have different calculators and different buffers when they look at your numbers. So you need to have a chat with a broker or a bank, or multiple banks in this case, to get the best result. Now, Emily and I have had success with brokers and without brokers. And I can say from our personal experience, we've been better off when I've dealt directly with the banks because we can get the direct answer from the bank. When we've worked with brokers, we've ended up working with a middleman who then goes to the bank for the information that I really want to know and I really need in a short period of time. And we've also had some negative experience with brokers who have dropped us within our 14-day finance clause. And they are big YouTubers now as well, which is quite interesting. So the key thing here is to have chats with multiple brokers and multiple banks to understand what your options are. Now, you don't want to hurt your credit score in doing this. So you don't want to do too many applications and have your credit checked multiple times when you didn't need to. So generally, I understand I'll chat with my main bank, which might be CBA in this example, and then I'll have a chat with a broker and a second and third tier lender if I'm looking to grow our borrowing capacity and get access to more debt when I can't get access with a first tier lender like CBA. Now, as a general rule of thumb, APRA-regulated banks, so Australian Prudential Regulatory Authority banks, which are deposit-taking institutions, so these are your big banks and a lot of your mid-tier banks, have a strict set of rules when dealing with ASIC and APRA in terms of their lending requirements. But non-regulated banks, which sit outside of this scope, these could be private lenders or Liberty loans, or these types of lenders who have more flexibility but charge a interest rate premium. That could be your option if you're getting stuck in terms of serviceability and you're willing to pay a slightly higher interest rate than those first and second tier banks. I've absolutely heard of people sitting on their hands once they've got a no from their current bank that they lend with, or the banks that they lend with. They might have a chat with one broker or one bank, and as soon as they hit that roadblock, they're like, I'm done. I've had enough. I'm out. I can't be bothered to have a chat with these brokers and banks. But for me, I've already got those numbers in my Google Drive. I've already got the numbers I gave to the first broker or the first bank. So why not just give all of that information to the next bank and the next broker and see what they can do for you? You don't have to get that far along to get an indication of what these brokers or banks could do for you in terms of taking that next step. So you've done most of the hard work if you've had a chat with one broker or bank. So why not have a chat with number 2 and number 3 just to assess your options? Now, how do you convince the bank to give you more money if you already own property or they're denying your loan? Now, as I said at the start, I'd share the story of how Emily and I were able to access over $700,000 from Australia's largest bank in CBA. And we did this at the tender age of 26, and which I thought was crazy at the time. This was one of the biggest steps in our property journey, getting access to this amount of cash sitting in our bank account that we could use for investment purposes, or if we wanted to, go out and buy a Lambo and invest in knowledge, but we're not going to go do that. We didn't have plans to blow that money on holidays or cars or anything like that. So how did the conversation exactly go with the bank? Basically, it went like this. Hi, branch manager. I'd like to have a chat with you.
Sure, Luke. How can we help?
I'd like to access equity in the current properties that we own.
Not a problem, Luke. We can look into that. How much do you think your properties are worth?
Now, me being the prudent investor, overestimates this property's worth by say 5 to 10% because you don't want to sell yourself short when you're chatting with the broker or bank. Hi, banker. I actually think the property's worth $1 million and $1.5 million and $800,000 for our third property.
Okay, Luke, let me write that down and we're going to organize a valuation. I've had a look at the desktop valuation here in front of me and they've come in a little bit short on your numbers. So would you like me to order a full valuation?
Absolutely. We love a full valuation. We've actually done renovations on this property and we think we've added a lot of value. So we'd really appreciate full valuations on each of our properties. 2 weeks later.
Hi, Luke. We've got your valuations back and they've come in just short of where you valued the properties. We can organize the refinance for you now.
That's fantastic news. Can we pull all of the equity in each of the properties back to an 80% LVR and top up each of our loans, putting the remaining cash in our offset account?
Not a problem, Luke. You'll get $250,000 off property number 1, $300,000 off property number 2, and $200,000 from your property number 3 in terms of equity. We can have those funds settled into your offset account in the next 2 weeks.
That's brilliant. Thanks so much for your help, bank manager. We'll sign the documents today and we're looking forward to seeing the funds in our account in the next few weeks. Thanks so much for your help. It was literally as simple as that. Crazy, I know. A few phone conversations with the bank, ordering some valuations after doing some renovations on our properties, and obviously the market doing some heavy lifting as well in terms of lifting up the values. And that's how we were able to pull over $700,000. Now you've heard, my back and forth phone call there. It really comes back to you at the end of the day. You need to take the action. You need to follow the steps in this video, have that phone conversation with your broker or with your bank and look to take the next steps. Don't get stuck sitting on your hands saying it's too hard. I've hit roadblocks with my banker. I've hit roadblocks with my broker. You need to take action and take that next step. It's absolutely possible to grow a multi-million-dollar portfolio and to start creating passive income for yourself. It just takes those small steps, one at a time, and then you can grow that portfolio to start creating choices in your life. If you actually want to see me chatting about how we got over $700,000 cash from Australia's biggest bank, there is a video previously I've made on it, so click that video over there. Otherwise, I'll see you in the next one. Peace.